I think we're winning it.
Billions and even trillions of dollars in tariffs paid by other countries.
I want to ask you a question at this point. Who do you think is winning in this trade war?
We're going to win this trade war.
There really is a winner here. His name is Xi Jinping.
India is going to be benefiting from what's happening with China and the US.
But here is the thing about trade wars. No country has ever been truly a winner. Neither the workers losing their jobs, nor the small businesses that are struggling to survive.
Small businesses are taking the hardest hit from the trade policy. Nearly 90% of small businesses depend on imports to some degree.
In October 2025, across major companies from Intel to Nestle, tens of thousands of layoffs are announced worldwide. Many of these job losses are directly or indirectly linked to the ripple effects of trade wars. Higher import costs, disrupted supply chains, low international demand, and weakened trust between countries.
We're going to issue a dividend to our middle income people and lower income people of about $2,000.
But while entire economies stumble and millions of jobs disappear, a select few seem to be thriving. And this is the story about who are really winning in this trade war and how they are turning a global crisis into an opportunity.
Wage bill all American workers cut more than
Every new tariff or trade wars in all of human history are sold as protection, a way to help local industries, saving jobs and restoring economic balance.
It's in your interest.
Defending America's national security.
We bet on American workers.
So you create jobs by placing tariffs.
But history says otherwise. Back in 1930, the US government passed the Smoot-Hawley Tariff Act, raised import duties on over 20,000 goods, and instead of saving jobs, it deepened the Great Depression, collapsing global trade by nearly 60% within 2 years.
stupendous burdens of national debt had been built up. Poison springs of political instability.
So here's how tariffs work. Tariffs make imported goods more expensive, which raises costs for companies that rely on those imports. To cope with that, businesses cut back production, delay expansion, or raise prices. That triggers a chain reaction. Less demand means lower output, and eventually fewer jobs. During the 2018-19 US-China trade war, the United States lost around 245,000 to 300,000 jobs. China's manufacturing sector suffered even more. Nearly 2 million industrial jobs vanished.
Looking backwards, the impact of tensions and tariffs have had a real impact on U.S. GDP, specifically in the impacting competitiveness of American companies, increased costs, reduced household wealth, and delayed investment.
So yes, most people, businesses, and even governments do bleed in times of trade wars. But everyone's losing means at least a few people or companies must be getting something. Take Apple for example. Back in 2019, when the Trump administration threatened tariffs on iPhones and laptops imported from China, Apple announced a plan to invest in USA. Weeks later, their key products were quietly spared from tariffs. Fast forward to 2025. Apple once again promises a staggering $100 to $600 billion in new manufacturing investments in USA. Soon after, the administration halts tariffs on its imports again.
There will be no charge. In other words, we're not going to be charging, so a lot of...
And Apple isn't alone in this case. Look at both Nvidia and AMD. Both were squeezed by US restrictions on selling advanced AI chips to China. Yet in April 2025, the administration struck a deal. Nvidia and AMD could sell their certain chips again if they agreed to hand over 15% of their China chip revenues to the US government.
Two of America's premier semiconductor makers gives the U.S. government a 15% cut of some of their profit from sales to China.
Meanwhile, Intel sold 10% stake to the government directly in exchange for trade deals. At first glance, it might look like these companies are giving up their profits. But compare it to what would have happened if tariffs had stayed. Their products would have been more expensive. So demand would drop, and competitors might have taken their market share. With tariff exemptions in place, that risk disappears, and smaller firms without that kind of political connections or budget are left struggling. In fact, they might end up stronger by taking businesses from smaller firms that don't get the same kind of a deal. So it's not exactly winning, it's kinda survival of the biggest. And it's not a coincidence. A study by researchers at the University at Buffalo School of Management found that companies donating to ruling party during the previous US-China trade war were far more likely to receive tariff exemptions.
It's a great deal for them, and I think it's a great deal. And we do a lot of deals like that. I'll do more of them.
They are having direct access to the White House and political parties through lobbying firms. These firms basically act as the middlemen, the ones lobbying to get tariff exemptions for their clients. This data tells us pretty much what exactly is happening. They are generating record-breaking revenues. More and more corporate giants are turning to back-channel lobbying to escape the weight of tariffs. Although recently the US government did make a few trade deals that brought tariff rates down a bit, but those numbers are still pretty high, so lobbying kinda isn't optional anymore. In every trade wars, there are some investors or traders who just seem to know the right trades just before the headlines. Their annual portfolio returns would embarrass veterans like Warren Buffett or Stanley Druckenmiller. And that brings us to the second list of winners. On October 10, the cryptocurrency market experienced what's now being called the biggest liquidation event in the history of trading. The market lost around $400 billion in less than 24 hours. Most traded coins like Bitcoin, Ethereum, Dogecoin all crashed in just a span of 2 hours. But here's where the things got interesting. Several anonymous accounts made nearly $200 million by betting against Bitcoin and Ethereum in less than 30 minutes when Trump announced fresh tariffs on China. These traders placed massive short positions. They bet that prices would fall right before the announcement that made the market crash. Similar thing happened on April 9 as well, the day Donald Trump declared a 90-day pause on most tariffs.
April 9th will go down in history is the greatest day of insider trading in history, where people were engaging in market manipulation and insider trading on non-public material information.
This is Charles Schwab. He made $2.5 billion today, and he made $900 million. That's not bad, because he's in financial.
Even before the Liberation Day tariffs, some US officials were already offloading their portfolios again just before the policy went public. And these insider trading allegations aren't entirely new. Back in 2018, during the earlier tariff war, one study found that multiple US officials sold stocks in companies that were about to hit by tariffs. And those stocks plunged by 40 to 50% within a few days after. But there is another kind of a winner.
Gold topping $4,000 an ounce for the first time ever.
That would double the yellow metals price in less than 2 years.
Gold is seen by investors as a safe haven in times of stress. But
2008, it didn't even get near as much as extreme as we are now.
It has traditionally been a hedge against a weak dollar, the other sort of classic reserve currency. And there have been a lot of reasons to worry about the dollar this year.
Central banks have been buying gold at the fastest pace in decades, and that is driving the price of gold extensively. Gold-backed ETFs have seen billions in inflows since late 2024. Countries like China, India, Russia, Poland have boosted their reserves in the last decade, partly to hedge against dollar volatility caused by tariffs and sanctions, and partly for another reason, and that's a pretty big one. We'll cover that topic in the next video. During any kind of uncertainties, while stock market or economy fluctuates a lot, this precious metal climbs steadily. Throughout history, it always has been the same pattern. Why? Because gold isn't tied to any government. It can be printed, it can be devalued by tariff announcements or policy changes. And central banks know this. That's why they have been accumulating gold at record rates. In 2024, central banks added more gold to their reserves than in any year since 1967. They are preparing for continued uncertainty, for more conflicts between countries, for currency instability. But this parabolic rise in price of gold is not just about trade wars. It's much more than that. If you want to understand about how gold fits into this picture, stay tuned for our next videos, where we will break down why gold matters more than you might think. There are so many variables, so many players, so many possible outcomes. And we are kinda in the middle of a transition.